it's Dave, and today we're talking about FICO scores. We're talking about credit. Not credits like in the movies, but credit as it relates to personal finance. So get a pen. We're going to be talking about some really important things about FICO scores, what they mean, how you can build yours up, and how that can help you establish a good, solid financial future. All right? But before we get going, do me a favor, like this video, subscribe to the channel, and make sure those notifications are turned on so you can get an alert anytime I post new content. Okay? Here we go. I understand starting out is really difficult. And when you want to start building credit, you kind of look around going, well, how do I do that? When I was young, I didn't really understand credit. I just thought, oh, that's money I can use to do this thing. And so I actually went out and made a movie and I maxed out 15 credit cards. I went $75,000 into debt when I was in my early 20s to make my first movie. And it took me years to get out of that hole. Please don't do that to yourself. Be smarter than I was about how to build credit. So let's start with the basics. Why should we care about credit? Well, having good credit is important because it determines whether or not you'll qualify for a loan. And depending on the interest rate of the loan you qualify for, it could mean the difference between hundreds or even thousands of dollars in savings for you over the life of the loan. A good credit score can also mean that you're able to rent the apartment you want or even get the cell service that you need. It's important stuff. And later, when you want to make big purchases like buying a house or a car, and you want to borrow money to make those things happen, most likely you'll go to a bank or a credit union or some other lender to apply for a loan. Now, a lender wants to make sure you're going to pay back the loan. Now, they're probably not going to break your legs like a loan shark, okay? But nobody likes a freeloader or somebody takes their money and heads to Vegas to put it all on red. They want to make sure you're good for it. And as part of considering whether or not to loan you the money, the first thing they'll do is look at your FICO score. FICO stands for Fair Isaac Corporation. It's a private company that provides industry standard scores of credit worthiness. That helps out both the lenders and the borrowers. Think about your credit score like a report card you might get at the end of a semester. But instead of getting a B+, you get a number. It's a 3-digit number that follows you around in the digital world. And it's calculated by all the information in your credit report. It measures how long you've had credit, how much credit you have, how much available credit is being used, and if you've paid on time. In plain English, the better your FICO score, the more money you can borrow. Now, a good FICO score also helps you get the lowest interest rate on your loan. The interest rate on your loan is how much the lender is charging you to borrow the money, right? The higher the interest rate, the more money you'll actually be paying back over the life of the loan. A good FICO score can save you thousands of dollars in interest and fees, as lenders are more likely to extend lower interest rates if you present less of a risk for them. A good FICO score will also help you get a longer-term loan, which means you have more time to pay it off. A good FICO score is really important. So what's a good FICO score? And more importantly, how can you get one? Now, a FICO score can range from 0, which is pretty much what you have if you're just getting started and you don't have any credit at all the way up to 850, which is a perfect score. That's like A+, gold star, angels singing in credit heaven kind of stuff, okay? Most people aren't there. Most people fall within a range. A range of 300 to 579 is considered poor. About 16% of the people fall into this category, and it means that lenders are going to be very skeptical about loaning you money. They might require you to pay a fee or put down a deposit against the line of credit that you're applying for. And there's a good chance you might not be approved for credit at all. Now, moving up the scale, a range of 580 to 669 is considered fair. About 17% of the people fall into this category. Now, if you're in this range, lenders will consider you a subprime borrower. You might have heard this term subprime before. Back in the real estate bubble in 2006, many lenders were making crazy loans to subprime borrowers. Eventually, these borrowers saw the price of their homes drop, and because they'd borrowed more money than the home was worth, rather than paying back the loans, they just stopped making payments altogether. They actually walked away from their houses. They left the bank holding the bag. These were the kinds of borrowers that are a big risk for the bank. Not as big a risk as those with a lower credit score, but still, if you're in this range, chances are you'll be paying more interest and higher fees with tighter restrictions on when and how you can repay the loan. Now, moving on up the scale, those with a FICO score of between 670 and 739 are considered to have good credit. About 21% of the people fall into this category. Essentially, if you're in this range, you stand a pretty good chance of getting a loan. Even though you may not get the best interest rates available, you'll probably get pretty favorable terms. Lenders have determined that only about 8% of the people applying for loans in this range are likely to become delinquent on their payments or just default on the loan altogether. The next category is between 740 and 799, and this is considered very good. About 25% of people fall into this range. Now, if you have a FICO score in this range, generally you'll get a better than average interest rate on your loan. And remember, the less risk you are to a lender, the less the loan will cost you. This is why it pays to build up good credit. If you ever want to borrow money to buy a house or a car or some other big purchase, the better your FICO score, the less the loan is going to cost you. Now, at the top of the scale, we have those that are considered to have exceptional credit. About 21% of the people fall into this category, and they have a FICO score of between 800 and 850. And generally, this means you'll get the lowest interest rates from lenders and the most favorable terms for paying back the loan. And if you have the 850, you get the choir of angels singing your credit heaven too. Now, over time, you can actually improve your FICO score. Okay, your credit report is always changing and your FICO score is updating all the time. There are several things that go into determining your FICO score. Things like payment history for loans and credit cards, and whether or not you've made late payments and just how late those payments really were. You got to be really careful about making sure you pay your payments on time. There's something called the credit utilization rate, or how much you currently owe divided by your credit limit. It's generally expressed as a percentage. For example, if you have $1,000 of credit available over 2 credit cards, and you have a balance of $500 on one of them, your credit utilization rate is 50%. In other words, you're using half the total credit you have available to you. That affects your FICO score. Next, the type of accounts that you have, the total debt that you have. If you have any public records that have, say, a bankruptcy on them, that'll affect your FICO score. How many credit accounts you've recently opened, the number of inquiries on your credit report. Basically, every time you apply for credit, the lender will make an inquiry onto your credit report. They call it pulling your credit. Okay, and the more times that your report gets pulled, generally, the lower your FICO score. So you want to be wise with how many times you apply for credit. Now, what do you want to do if you don't have any credit at all? Let's say you're at that big fat zero. In some cases, you may not have enough credit history to have a credit score. Depending on your age, there's a bunch of different ways to establish credit. If you're under 21, you have to have a cosigner, or be able to demonstrate that you have an adequate source of income to pay back any credit that is given to you. Now, if you're responsible and you can get a parent to co-sign on a credit card for you or add you as an authorized user to one of their accounts, that's a great way to help establish a positive credit history for yourself. Now, for others, the best way to establish credit might be able to work with your bank or talk to your credit union. Open an account with a small credit line. Okay, they might give you just a small amount, a couple $100 to get you started. You got to inquire. You got to go make sure that that's a possibility. And my favorite way to start building credit is to open a secured credit card. You don't need anybody to co-sign with you, and it's a great way to start building your credit. Now, securing a credit card means that you make a refundable deposit in the amount of the credit you want, up to certain amounts. Okay, so let's say you want a credit limit of $500. You make a deposit to the lender, the bank or the credit union, in the amount of $500. They then issue you a credit card. Now, it's not a debit card. You're not actually drawing on that deposit you made. Instead, you're using the card as a real credit card. You get a statement at the end of the month with all your charges. Then, when you pay off the balance at the end of every month, you're actually building credit. And after a while, once you've established good credit and you've built up that trust with your lender, then you'll get your $500 deposit back and you continue to use the credit card. My favorite secured credit card is the Discover card because it actually pays you cash back at the end of every quarter. 2% on things like gas, 1% for everything else. Okay, it's like a bonus for being a good credit customer. They didn't pay me to say that, okay? I just have a personal experience with it. It's a great way to go. Now, if you hear nothing else, okay, please understand the most important part about building good credit, pay your balances off at the end of every month. If you can't afford something, don't buy it. Okay, be smart, live below your means, have a little patience, build up good credit, and set yourself up with a strong financial future. Okay? All right, so that's it for today, guys, but I'm going to be doing a lot more on how to build up your FICO score and what dangers to watch out for when using and building credit. So if you want to keep up, please subscribe and turn on those notifications so you can get an alert anytime I post new content, okay? Go get them, guys. We'll see you soon.